today on the Tearsheet Podcast.
I had seen the mint.coms of the world. I had seen a number of financial applications that were being built, and the scale and scope of what they could do was always very limited. And to me, I felt like this was a massive problem, and that's people's financial wellness and the disenfranchisement of certain people of political and social economic status and their access to financial services. So I thought that in order to reach the biggest possible population, it would have to come in partnership with institutions that already had the reach of 100 million or hundreds of millions of customers. And so we knew that banking apps were ones that were the least deleted on people's phones, whereas these financial management apps were very often deleted because it was so easy to be frustrated with them or not get the use out of them, and they would go.
Welcome to the Tearsheet Podcast. I'm Tearsheet Editor-in-Chief, Zach Miller. The world of personal financial management is undergoing a change. Standalone apps are incorporating more banking functionality, getting into money movement and not just advice, in order to have a bigger impact. Banks and financial institutions are being more thoughtful about launching their own tools to help their customers. That's where Sensibill comes in. It works with firms like JPMorgan to much smaller institutions to help their customers make sense of their finances. Using SKU-level data, Sensibill is also helping the institutions themselves understand their customers better. The firm just launched the Sensibill Platform. Sensibill CEO and co-founder Corey Gross is my guest today on the podcast. Before we hop into our conversation, I wanted to tell you about Tearsheet's Acquire Conference 2021. It's all about the growth behind today's top financial brands. If you want to hear what top brands in the industry are doing to grow, to scale, to market, you're going to want to attend Tearsheet's Acquire Conference. We've got brands like Marcus by Goldman, Current, Step, Zelle, Shopify, it reads really like a who's who, MoneyLion, Charles Schwab, PayPal, Square, N26, Vero Money, Stash, Cabbage, Tally. If you want to hear what these firms are doing and how they're approaching growth in this era, you're going to want to attend the conference. The conference is sponsored by BurgoPack. It's February 16th and 18th. For more information, you go to tearsheet.co, our website, and click on conferences in the upper right-hand corner. Hope to see you there.
My name's Corey Gross. I'm the founder and CEO of Sensibill. What Sensibill does is we provide financial tools to banking customers in partnership with their financial institutions. So everything from spend management, receipt management, expense management, embedded within mobile and online banking applications. So today we work with more than 60 million customers through more than 100 institutions, ranging as big as JPMorgan Chase to as small as your local credit unions and community banks in Canada, the US, and the UK.
I love the name Sensibill and sort of the double entendre that it has. Like, where'd that name come from?
The honest to God story behind the name Sensibill came when I was in bed with a list of various plays on words on my laptop. And my wife just said, just call it Sensibill and be done with it. It wasn't even on the list. She just blurted it out as simply as that. And I kind of shrugged my shoulders and said, well, that's as good as any I'm going to come up with. And that was it.
Nice. And was the model always to go through banks to distribute the tools, or was it to go direct to consumers initially?
It was day one. We were going to be the type of fintech that was going to collaborate and partner with financial institutions rather than be a standalone tool.
Smart man.
Well, we'll see, right? That's the idea. I mean, let's wait a couple of years and have this conversation. We'll talk about whether I was right or wrong. But I mean, here's what motivated us to go this way. I had seen the mint.coms of the world. I had seen a number of financial applications that were being built, and the scale and scope of what they could do was always very limited. And to me, I felt like this was a massive problem, and that's people's financial wellness and the disenfranchisement of certain people of political and social economic status and their access to financial services. So I thought that in order to reach the biggest possible population, it would have to come in partnership with institutions that already had the reach of 100 million or hundreds of millions of customers. And so we knew that banking apps were ones that were the least deleted on people's phones, whereas these financial management apps were very often deleted because it was so easy to be frustrated with them or not get the use out of them, and they would go. So we felt we'd have more reach and probably have more ability to change lives if we partnered.
That makes a lot of sense. And how did you go about getting those first customers?
I'll say everyone kind of looked at me as this the big bank whisperer. So how did you start with, I think our first press release.
What's the secret, Corey?
Yeah, that's right. Everyone, saw the releases with, Royal Bank of Canada and Scotiabank and TD, and thought that just happened. It was kind of right place, right time. We knew some good people at the banks here in Canada. Also, most of our venture capital companies were arms of financial institutions here. So RBC Ventures and TD, et cetera. And so we had made good connections in the venture community. They were excited about what we were doing. We got introductions to people who are working on, that next phase of mobile banking with mobile wallets and whatnot. And they thought that, expense and digital receipt management paired nicely with it. Had good conversations. Before we knew it, we had LOIs and pilots, and we kind of rode that to credibility. But I mean, here we are saying whether this is a good or bad idea. A lot of companies have had super success starting with credit unions and community banks, so they could prove out those test cases early, and they've rode that to great success. So it was just more of a function of what was happening organically for us at the time.
And I guess in the early days, and we'll jump to sort of the present time in a minute, but was there a lot of feedback that they gave that informed the early product?
Yeah, early days, this was really about pairing what we had with mobile wallet solutions, because we always had a George Costanza wallet in mind, as I think a number of banking based wallets did. And Google Wallet, I think actually the early Google Wallet had a commercial of that Seinfeld episode with George, pulling an offer off of a lamppost, and he tried to fit it in his wallet, it exploded, and everything flies everywhere. And I was just kind of like banging my leg and saying, damn, that was our thing. But what we were inspired by, and where we got a lot of feedback from customers, was, hey, I want you to take the loyalty cards, the offers, the punch cards, the receipts, the credit cards, get them out of this, physical wallet and put it on my mobile phone. So we always tried to think about, what was the best possible experience for helping people manage their finances. Like, what if their wallet could talk to them and tell them how much money was actually in there, and what the implications of spending whatever money was in there would be on their financial health. So those are the types of pilots we ran. We were fortunate to get good feedback from those customers, and it really informed, at the time, was our midterm roadmap of building, really effective financial management tools that people would use in the context of their payments.
And what are banks doing to exactly what you're describing? How do they get them to use that? Because I think that's one of the challenges. Is there are a lot of tools out there. How do you increase engagement?
Yeah, I mean, call that the $100 million question for every financial institution that partners with one of these fintechs that promises, great engagement with the next widget. It's a challenge, and I think it's what we did was we approached it as a partnership, right? There's not going to be a silver bullet to this stuff. We know that personal financial management at certain financial institutions has like a 3% uptake, and then we know that companies that have been able to really nail this with the right partner have been able to get it to like 20, 30, 40%. And so what that tells me is that it really depends on the willingness of the partner to align on marketing calendar of events that we can trigger to get people to do this stuff. How seamless the experience is in app. I mean, I'll tell you, Zach, if you're going to open up your mobile banking app and it takes you 4 or 5 clicks to find, the receipt manager or the spend manager, you're probably going to be a lot less likely to count on it than if, you open up your app and there, it gives you, instant insight and education that helps inform how to live a better, healthier financial life. So it's partially about, marketing and communication to the customers, knowing what communications are most effective to the customer base of that institution. And then obviously the experience, how long does it take for you to get value? And that's not any different principle wise than any app that you've downloaded.
Interesting. And I guess, do you envision that Sensibill competes with, I guess, other bank PFMs or non-bank PFMs? Who do you see as like, I guess, who has more cachet in the consumer's eyes?
I think it depends on the type of consumer. So many people that, we think should know what Mint is and what, a QuickBooks is and all this stuff. I mean, they don't, right? Like a lot of the customers that used Sensibill for expense and receipt management from a business perspective, their biggest, competitor to us was a manila folder and, graph paper, right? And so we were helping more unsophisticated entrepreneurs and solopreneurs and consultants than we were, a much more seasoned, digitally savvy, mobile savvy crowd. And the bank was the first step towards educating them that there were, maybe better tools available to them. In terms of who we think that we compete with for our customer reach, I think there's, we are not quite a pure play PFM. We don't see ourselves completely at odds with the Yodleys or the Personetics of the world. I think some of our tools are very complementary. We get to item level information from people's receipts. They, tell you how much you spent in the grocery category. So what we can do is feed data into those PFMs. So we don't see them as competitors, maybe indirectly for prioritization on the part of a bank, but we don't see ourselves being in either or. As for the end user, I think that, like I said, there's going to be a class of user that's going to go off and feel more comfortable using a mint.com. But I think that we speak to the people who like to entrust all their, financial data with institutions and get a little bit skittish whenever, a third-party app asks them to log into their bank account on their behalf. So in that way, I think we cater to a more privacy-centric and less, willing crowd of people that share data very freely.
Got it. And how do the banking customers that you're landing today differ? How have they evolved since those first customers that you landed?
I think there's, when we first started, this was a complementary, like I said, to mobile wallets and mobile payments. And I think there's definitely more of an interest now on helping people solve for financial wellness issues. So we get a lot more in the way of collaboration for how we communicate this message to customers. There's a greater willingness now to use Sensibill as a way of understanding their customers more deeply. So not really a point solution as a financial tool, but now more of a platform, which I'm sure we'll get into, for helping understand customer needs in far more granular ways. Like one of the things that we did with some of our early customers was say, hey, we can use our data to determine whether there are businesses and entrepreneurs and independent contractors hiding within personal banking. And would that be interesting to you, major bank? And once we showed them the data, they said, well, if we even have a modest conversion rate, something that we use for most of our campaigns, we could see a major uplift in revenue, not just on the business banking and small business side, but we might be able to help build longer lasting relationships with these folks than we would have had we just been speaking to them like they were some kind of personal banking customer. So I think the story has evolved to where that is such a big part of what we offer now today, is revealing the truth about their customers' needs and wants and intentions. And that's what I think people use this for now primarily, not just as a point solution for financial wellness, but how do we help continually building relationships by understanding their financial needs better.
That's awesome. And that's obviously a great segue to my next question, which is how the product has evolved and where you're taking the product forward, this platform concept. Can you talk about that announcement, the recent announcement, and sort of what that means?
Yeah. So historically we had, what most people just pegged as, we were the digital receipts guys, or we were the receipt management guys, and receipt management would also feed into expense management, but on the business banking side. So we said, yeah, we are that. But what we've always been able to do is say we can get to such granular levels of data from the receipts that customers capture, we could offer a much more comprehensive spend management tool. And data that gets extracted from that spend management tool that might be able to feed into other personal financial management services that banks offer. So we announced Spend Manager, which still does obviously contain receipt capture and receipt management functionality, but we offer people more insights, out of the box, based on what we're learning about their spend and what we're inferring about their needs. And that data isn't just exclusive to our interfaces. It's data that can feed into existing products and services that the banks already have today. So it is a comprehensive spend management solution. And then what we have is Spend Insights. And Spend Insights basically takes a lot of this knowledge that we've accumulated so that we can better segment customer needs across an entire financial institution's population. And Spend Insights informs how you might be able to best communicate with those customers based on what those unique needs are. So we might be able to infer based on a customer buying baby formula or diapers at, suddenly or at a rate that they never might have before as a new or expecting parent. And that obviously changes the dialogue that you have with that customer based on their life stage. And so those applications, Spend Manager, Spend Insights, are two of the first, I would say, formal products that come from the Sensibill platform. And so think of the Sensibill platform as a platform that enables the creation of these financial tools on the user-facing side. But on the back end of this, allows all of that knowledge, all of that data that we accumulate to be fed into existing and potentially new use cases for SKU-level data. So we're excited. This has always kind of been part of our lifeblood and part of the vision of the company, but we've been able to formalize this because of all the data that we've been able to help banks unlock about how they can build better relationships with their customers. Mm-hmm. And we're really excited about all the inbound we've gotten from technology partners from banks that want to be able to build new and compelling experiences using the Sensibill data platform. So that's really what it's all about.
Is it a way, I guess the platform is that create sort of like a fintech layer for banks based on top of their data?
Yeah, what it does is it allows them to, and what we don't do just sort of philosophically is we don't want to share, bank XYZ's data with fintech 1, 2, 3, right? Mm-hmm. Like that's not what we are, because, germane to even the early part of this conversation is, we truly believe in the security, the secure nature and private nature of the relationship between customer and the financial institution that they entrust, right? And so we never want to violate that. What we see is this as a layer that a third party can use to build new experiences independent of financial institutions, using SKU-level data to build kind of like I don't want to say plaid for SKU-level data, but that's a good way to imagine it. Mm-hmm. And for a financial institution who right now, as you know, is partnering with more and more fintechs to power different aspects of the banking experience than ever, we provide a platform for all of those fintechs to tap into and use independent of just simply the core or just simply the transaction logs that usually fuel a lot of these personal financial management type use cases.
Got it. That makes sense. And how has that impacted, I guess, the type of financial institution that's interested in working with Sensibill?
I'll tell you that, to me, there's no better validation or credibility that we can earn than from the types of partners that we've been able to work with so far. So, we're fortunate that we have evangelists at the international $1 trillion banking level, and we have super evangelists that are $100 million, $500 million banks or credit unions. So it doesn't really impact it at all. I think what it does for smaller institutions is we have more turnkey solutions available on day one. We don't necessarily have to rely on them to have a ML team or data science team staffed up to take advantage of this stuff. They can do that on day one. But yeah, I mean, they still get to benefit from the shared knowledge that we've been able to accumulate from banks that have tens of millions of customers.
Got it. And I guess, Corey, in the remaining time that we have, I'm interested, obviously, big launch, obviously. Curious to know where the product maybe head in the future, what you're thinking about, your plans and priorities for 2021. What's on your plate?
Yeah, 2021. I mean, obviously, we were quite busy in 2020 as we have been hard at work on delivering this and announcing this. 2021 to us is about, if you think about both sides of that Sensibill platform, on the one hand, Spend Manager, how do we find ways, how do we find compelling experiences that allow people to take greater control of their financial future? That obviously occupies a good bit of our time. On the other hand, it's really hardcore work making sure that this platform can be optimized and used from customers ranging from financial institutions that are sophisticated and need a little bit of support to fintechs that want to tap into this and build their own unique experiences from the platform. So what we're going to be doing a lot of in 2021 is launching this stuff, learning about the use cases that people experiment with and people take to their customers, and then making this platform more accessible, more easy to use, and better. And then from 2022 and beyond, we truly see ourselves as a highly differentiated data platform because of that SKU level depth of data. And so something that we've put out consistently is, this analogy, this metaphor of the iceberg. And so most of what fintechs and banks use today as a way of connecting and building relationships and servicing their customers is really the tip of the iceberg. And that huge mass underneath the waterline is what we offer. So if you think of why technology companies like Amazon, like Google, like Apple, like Facebook have been able to build these long-lasting relationships with their customers, like Netflix, like Uber, is because they learn about you in so many personally relevant ways that it's only natural that they might be able to have a conversation that speaks more directly to you. Spotify is another good example of this. So how can we bring the best of what big tech and the best of what very sophisticated technology companies have been able to leverage in terms of customer data to a trusted organization that has your financial well-being and the growth of your financial well-being directly benefits them. So that has that at heart and not wants to abuse data for venture style profits. So that's what our vision is, and that's what our focus is for 2022 and beyond, to Amazonify in a lot of ways the banking experience in the best of ways.
Great. Thanks for joining us on the Tearsheet podcast today.
No, really appreciate you having me.